If you're thinking about buying a home in Vancouver in 2026, this is not a market to rush. I'm seeing a lot of buyers waste time in the market, not because they're doing anything wrong, but because they're missing context. In this video, I'm gonna walk you through exactly how buying a home works in 2026, the real costs most people underestimate, the actual timeline from offer to possession, and the mistakes cost buyers the most amount of money before even booking a showing. This is not commentary. This is practical step-by-step breakdown so you can make decisions with clarity instead of reacting to the headlines. Let me be clear about who this video is for. This is for first-time homebuyers, people relocating back to Vancouver, and buyers starting with condos or townhomes. Last year, over 50% of the conversations I had with first-time homebuyers started the same way. They weren't just unsure about what to buy, they didn't even know how to begin the process or what the stages of the home buying process looked like. I've helped many clients move from renting to buying successfully, and that's exactly why I made this video. Side note, this is also a great refresher for homeowners who haven't purchased a home in years and just want a clear understanding of what today's process is like. If you're casually browsing or just watching the headlines, this probably isn't for you. But if you're actually planning to buy, even if you're 6 to 12 months out, this will save you time, money, and stress because you'll understand the process before you're in it. I'm Jovita Pinto, welcome. In this video is where I'm going to break down the home buying process honestly, the strategy, the details and definitions, and things I wish more buyers understood before making a move. And if you want to talk through your own situation, you can book a call with me or my team. The link's below. Buying in Vancouver rewards people who are prepared and early. This video is designed to do exactly that. So let's talk about what buying actually looks like in 2026. First, let's get real. 2025 was slow. In fact, it was the slowest sales market in 20 years. Residential sales in the region totaled to 23,800 in 2025, down 10.4% from 2024 and down 24.7% from below the 10-year annual sales average. Now, this is not a market update, but remember, context is important. In the latest housing report from the Greater Vancouver Realtors, specifically, we noted that the trade tensions with the US could negatively impact sales and prices, and this downward risk came to pass. That was said by Andrew Liz, GVR's chief economist and vice president data analytics, from the forecast we put out last January. What that created is leverage, not because prices collapsed, but because urgency disappeared. Most offers today are conditional, subject to financing, subject to inspection, subject to document review. That's not hesitation, that's time for due diligence. We're also seeing far less emotional bidding. Over the past 5 years, I've guided homebuyers through just about every situation you can run into. First-time home purchases, competitive offer situations, financing hurdles, and everything in between. I see homeowners that are re-entering the market to either upsize or downsize that are more guarded and scared to repeat how aggressive the last cycle felt. 2021's trauma left more than a few scars. It changed how people approach decisions. Overall, buyers aren't rushing. They're comparing their options, asking better questions, and walking away when the numbers just don't add up, and rightfully so. And in 2026, I'm fully anticipating we're going to see more informed buyers and educated buyers in the marketplace with time favorable terms on their side. This isn't 2021. Phew! So now let's talk about real monthly costs, not just the purchase price, because this is where a lot of buyers get surprised, and even when they think they're prepared, sometimes it's not. Let's start with the obvious one, mortgage, because this is where most confusion begins. A mortgage is simply the amount you borrow from the bank to buy the home, paid back monthly over a set period of time with interest. The monthly payment becomes one of the largest fixed expenses as a homeowner. This is also where a lot of buyers misunderstand what the lender is actually telling them. A pre-approval tells you the maximum amount a lender is willing to lend you based on your income, existing debt, credit history, and today's lending rules. It answers the question, what could I borrow if everything lines up? It does not tell you what your monthly life will feel like once you own the home. Most people miss this. Approval is not affordability. Just because the bank says you can borrow a certain amount doesn't mean you should. A pre-approval is very important. It just shouldn't be the only number you rely on when creating a monthly budget. In 2026, the question isn't, can I get approved? It's, does the payment work for me and everything else when you add in all the additional costs? Next, let's talk about strata fees, because this is a big one. Strata fees are not optional. They're not temporary either. They're a fixed monthly cost that continues for as long as you own the home. What those fees cover and how much they are depend on the building's age, the size, the amenities, and the overall health of the building, plus the contingency reserve fund. Two condos with the same purchase price can feel very different month to month when strata fees are factored in. The difference matters when you're building a sustainable budget. Next are property taxes. Most people are surprised by this because they underestimate how quickly it adds up. Property taxes are typically paid either annually or biannually, and it needs to be thought of as a monthly cost. One that creeps up on everyone who previously rented is utilities. Utilities are things like hydro, gas, water, and garbage. They're often overlooked because they all seem manageable on their own. Together, they change materially your monthly number, especially when the budgets are already tight. Now, sometimes gardening, garbage, or snow removal, or even gas that are covered in your strata fees, but not always. The trickiest one is water, so always check. Home insurance is another one, and most people miss this. Home insurance costs have increased, and coverage varies depending on the type of property, the location, and in some cases, it's also when condos and townhomes where the strata policy ends and where personal coverage begins. This isn't something to figure out after you've bought. It belongs in the monthly picture from when you start. And finally, maintenance. More specifically, larger maintenance items. Most people miss this because it doesn't show up on a statement. Even in condos and townhomes, there are ongoing costs, wear and tear, small repairs, upgrades, and even unexpected larger costs. This shows up as a special levy. In detached homes, the number is even more important to plan for. Here are the key takeaways. When you add all of this together, the real question isn't, does this still work comfortably month after month? The difference is what separates the purchase that feels manageable from one that feels tight very quickly. Okay, so once you understand the cost, the next thing buyers want to know is how the process actually unfolds. Here's what buying in Vancouver, the full timeline typically looks like in 2026. The first step is preparation. I feel like I call this relationship building. Before viewing homes, it starts with understanding the buyer. This is where goals are discussed, not just for today, but also for the next few years. Lifestyles, needs, must-haves versus nice-to-haves, timing, flexibility, long-term plans, and all of this gets clarified. Now, this is a work in progress, but it's important important to have a strong foundation. This is where the working relationship gets established, which matters more than people realize. This is what I remind my clients all the time. You're buying your first home, not your forever home. The goal here isn't perfection, it's security, financial freedom, and a chance to take a step forward. After clarifying your needs, the next step is numbers. This is where budgets are defined properly. Pre-approvals, not just online pre-authorizations that are put in place. Monthly comfort levels are established, and all the costs are layered in, so not just that mortgage. This step turns ideas into realistic options. Next comes the search phase. This is when you start viewing homes, comparing options, and narrowing it in so you know exactly what actually fits your lifestyle and your budget. Buyers are usually seeing multiple properties, revisiting favorites, and taking time to assess value rather than rushing to write an offer after their first showing. Then comes the offer. The offer sets the price, the deposit, completion date, and any conditions, often called subjects such as financing, home inspection, document review. In addition to subjects, offers can also contain and include warranties and representations and provide added buyer protection. For example, one common protection for a strata purchase relates to special levies. A clause can be added stating that if a special levy is approved after the offer is accepted, but before completion, the seller is responsible for paying those levies. This protects the buyer from unexpected costs between acceptance and completion. There are many unique protections for specific non-strata properties like duplexes and detached homes. This is why it's important to clarify and clearly talk through the requirements in advance so the right clauses are included and your interests are properly protected. In 2026, conditional offers are common and expected. I'm going to pause for a quick second. Now, this is where negotiations typically happen. After the offer is accepted, you enter into the subject removal period. This is a defined window, often several days, where you complete your due diligence. Financing is finalized, inspections are completed, and documents are reviewed, to name a few. This is where decisions are confirmed, not rushed. Once subjects are removed, the deal becomes firm. From there, it's paperwork, preparation for lending up to completion. Funds are transferred, legal documentation is signed, and ownership officially transfers from one hand to the next. Possession usually follows shortly after, and that's when you get the keys and you get to move in. It's my favorite part. Here's the most important part. While there are nuances to the buying process, it is structured and predictable when you understand it up front. Stress usually comes from not knowing what's next, not the steps themselves. That's why I'm obsessed with systems and processes. We use a clear 5-step system that guides buyers from the moment they raise their hands to move forward on a property all the way through to getting the keys. There are also clearly defined steps for before and after as well, so nothing is left to chance. When buyers understand the timeline clearly and early, they know what to expect at each stage. They feel clearer in decisions and avoid unnecessary pressure. Now let's talk about mistakes I see that cost buyers the most amount of money and stress. Not because people are careless, but because these are things that tend to happen in real time. Okay? So mistake number 1, falling in love before the numbers are in place. I see this happen when buyers emotionally commit to a home before they are fully with the understanding of their pre-approval and their monthly picture. I've even heard buyers making offers before they have a pre-approval in place, And that's risky. Once that happens, it becomes very hard to walk away, even when the numbers are tight. The decision shifts from objective to emotional, and that's when people stretch further than they had planned. Mistake number 2, confusing approval with comfort. This usually shows up when a buyer anchors themselves to the pre-approval number instead of their monthly reality. On paper, everything works. In practice, the payment feels heavier than expected once strata fees, taxes, and everyday expenses are layered in. Approval answers whether the bank is comfortable, not whether you are. Mistake number 3, skipping document review. This one happens more than people actually realize, especially when it comes to condos and townhomes with so many strata documents. Buyers skim those strata documents or rely on summaries instead of understanding what they're actually buying into. Upcoming expenses, building health, or operational risks. Those details matter long after the excitement of possession wears off. Mistake number 4, rushing subject removal. This usually happens when buyers feel pressure from timelines, competition, or fear of losing the property. Subject conditions exist to protect you. Removing them before questions are fully answered turns a controlled process into a risky one. It's also important to understand this. Once your offer is accepted, another buyer cannot bypass you or take the home before your subject removal date. A seller can accept a backup offer, but that does not replace your contract. When that isn't planned for, even a good purchase can feel stressful early on. Here's the common thread. None of these lack effort. They come from moving too quickly without enough structure. And the good news is, every single one of these is avoidable with the right preparation. When buyers slow the process down just enough to avoid these mistakes, outcomes change. Not because the market suddenly becomes easy, but because decisions become clearer. Buying in Vancouver in 2026 isn't about early or aggressive. It's about understanding your needs, your numbers, your timelines, and your priorities before you're in the middle of a decision. That's exactly what I help buyers do. I like to call it relationship building. If you'd like to talk through your numbers, your timing, or what's actually realistic and next steps look like, you can book an easy discovery call with me. There's no pressure. It's simply a conversation to make sure you're approaching this with the right information. And if this video was helpful, keep an eye out for the next one, where I'll walk you through what upsizing looks like in Greater Vancouver and how families use equity strategically when they're ready to make their next move. Thank you so much for watching, and I look forward to seeing you on the next video.